Hey everyone, thanks for joining. Today we're doing a deep dive into MongoDB or MDB. We're calling it the long-term memory for Agentic AI. This is a high-conviction investment thesis because we believe MDB is the critical infrastructure layer for the next generation of software. Currently, we've got a buy rating with a score of 78 out of 100. It's a medium-risk play with at least a one-year horizon. Just a quick reminder before we start. This isn't financial advice, so please do your own research. So, why are we talking about MDB right now? Basically, it's a setup play. The stock is currently sitting about 40% below its 52-week high, which has created a rare entry point into a business that's actually improving structurally. We're seeing a massive inflection in free cash flow that the market hasn't fully priced in yet. Plus, with vector search integration, MDB is now smack dab in the middle of the AI developer's workflow. The core of our thesis is that agentic AI changes everything. Traditional AI is stateless, it basically forgets things. But agentic AI is different. It plans, reasons, and executes over time. To do that, it needs persistent memory and operational context. That is exactly what MongoDB delivers. Let's break down those two requirements. First, agents need persistent memory to store things like user preferences and complex logic. MongoDB's document model, JSON, is the native language for this kind of data. Second, agents need operational context. They don't just know things, they do things. By letting agents query and update in a single database, MongoDB cuts out that annoying system lag you get with fragmented setup. Moving into Chapter 1, let's look at the financials. MDB is shifting from a growth-at-all-costs model to a profitable powerhouse. For FY 2026, we're looking at nearly $2.5 billion in revenue, which is a solid 22% growth. But the real star here is the free cash flow, estimated to hit $500 million. That's a 316% jump year-over-year. With 71% gross margins and over $1 billion in cash, they have a fortress of a balance sheet. Here's a quick snapshot of those key metrics for 2026. The verdict is green across the board for growth, cash flow, and pricing power. While the price-to-sales ratio is around 8.6x, we feel that's a fair price given the level of growth and the massive inflection in profitability we're seeing. Technically speaking, we're at a high-probability entry point. The price is hovering around $265, right near some key support levels at $254 and $261. While we're recovering from a deep correction, that $250 floor looks very firm. If we see a breakout above 317 on high volume, that'll be our signal that a new bull cycle is officially underway. Let's look at our scorecard. We gave MDB a weighted score of 78 out of 100. The fundamentals are strong at 85% because of that FCF explosion. The AI strategic fit is our highest score at 92% because their moat is so deep. Technicals are a bit lower at 60% since we're still in recovery mode, but overall, it's a strong buy. Why did we score the AI fit so high at 92%? It's all about Atlas Vector Search. It's a sticky moat. Once a developer builds an app on Atlas, the cost to switch to another system is huge. There's no need to sync between separate databases. It's one query layer for everything. With millions of developers already using MDB, it's the path of least resistance for AI adoption. In Chapter 3, we have to look at the competition. There are specialized vector databases and the big cloud giants, but MongoDB's all-in-one strategy creates a moat that's really hard to replicate. They're simplifying the backend in a way others can't. When you compare MDB to the field, the advantage is clear. Specialized databases only handle vectors, which adds complexity. Cloud giants like AWS or Azure can be fragmented. MDB Atlas gives you operational and vector data in one system with massive developer reach. If you want to track this, Keep an eye on Atlas consumption in their earnings reports. It's the best signal for real AI adoption. To put it simply, unified beats specialize. Using separate databases creates a fragmentation tax. More lag, more cost, and more things that can break. For AI agents that need to reason in subseconds, having everything in one place isn't just a nice to have. It's a hard requirement for the system to work. Now, no thesis is complete without looking at the risk. We've got our eyes on 3 specific scenarios that could change the story for MongoDB, so let's walk through them. The first risk is commoditization. If Microsoft or Google make their tools good enough and much cheaper, MDB might lose some pricing power. Second is growth normalization. If revenue growth slips below 20%, the market might reset the valuation. Finally, there's execution risk. If a price war starts, it could squeeze those healthy margins we're currently seeing. Even with those risks, the risk-reward ratio is about 3 to 1. In our bull case, the stock hits a 419 target. That's 58% upside. In the bear case, it could drop back to 210, which is about a 20% loss. For a long-term portfolio, that kind of asymmetric upside is exactly what we look for. So, how do we actually play this? In Chapter 5, we'll outline a disciplined plan to build a position in MDB while managing the stock's natural volatility. Here's the plan. Look for an entry zone between $255 and $270, layering in over a few tranches. Because the stock can be volatile, we suggest a position size of 3 to 5% of your portfolio. Watch that 317 level for a breakout to add more, but if revenue growth drops below 18% for 2 quarters in a row, that's our signal to exit. Zooming out for a second, this is about finding the software enablers. Everyone is crowded into chip makers like NVIDIA, but the real long-term winners are the infrastructure layers that every AI app has to touch. MongoDB is moving from being an optional tool to a mandatory part of the AI stack. The bottom line? MongoDB is the memory layer for the agent era. With $500 million in free cash flow, a dominant share of developer mindshare, and a target price showing 58% upside, we feel very confident in our 78 out of 100 rating. To wrap things up, MDB isn't just a database company trying to catch the AI wave. It's becoming the backbone that autonomous agents need to function. At current prices, you're getting a major piece of AI infrastructure at a reasonable growth stock premium. It's a buy in the 255 to 270 range for those with at least a 1-year horizon. Thanks for listening.